How's everyone doing? Just wanted to take a few minutes, go over an example of adjusting entries, which I know we have touched on in chapter 3. So I put together a problem. I hope this helps. I know there's going to be a quiz. It's due by the 18th, which is, so it's due on the 18th. So let's take a look at adjusting entries. So I put together a problem. Remember, I'm not good at uh, talking and typing, so bear with me. Um, so we'll take a look at four transactions for adjusting entries. They're pretty straightforward. So let's look at A, B, C, and D. So when we look at A, we've got 3/4. For each of these separate cases, you're going to prepare adjusting entries required of financial statements for the year ended, and that's December 31st, 2013. So, and then the assumption is that prepaid expenses are initially recorded in asset accounts, and the fees collected in advance of work are initially recorded as liabilities. All right, so let's take a look at this. So we've got number A, not number A, letter A. 3/4 of the work related to 13,000 cash received in advance is performed this period. So let's look at that. We've got to calculate what the unearned fee revenue is. So let's take we've got 13,000. So we've got 13,000 and we've got 3/4. So we've got 0.75. So that'll give us $9,750. So now we've got our number there. So let's start putting together the accounts. So let's look at A. We'll call that unearned fee revenue, and I'm going to abbreviate here unearned fee revenue. Now let's get our debits and credits. So let's put the debit here. Let's move the credit line over here. Excuse me. Then we've got the other is our fee revenue. So I'm going to abbreviate that. And then so we're going to have a debit to the unearned fee revenue, $9,750. So then that gives us a credit for fee revenue for $9,750. Pretty straightforward. Let's look at the next one. So we've got wages of $6,000 are earned by workers, but not paid as of December 31st, 2013. So we owe the workers that $6,000 of wages, but they're not paid. So we've got, let's get our wages expense. And then let's go ahead and put wages payable. So we've got wages payable here. So let's do our, and I'm abbreviating. And so we've got our 6,000 debit to wages expense, 6,000 credit to wages payable. So let's move on down. We've got depreciation on the company's equipment for 2013 is $10,960. So we're going to have, with this one, this is pretty straightforward. We're going to have two accounts. So I'm going to abbreviate the depreciation, DEP, and then let's call it expense. And then let's put that for equipment. So let's abbreviate equipment like that. So that's one account. Now we've got our accumulated, I'm going to abbreviate that, our accumulated depreciation for equipment, and I'm abbreviating equipment as well. So we've got that. So let's look at our debit. So we're going to debit the depreciation expense for equipment, like $10,960, and then we've got our credit for accumulated depreciation, $10,960. It's pretty interesting. Now, Let's look at this last one. The office supplies account had $420 debit balance on December 31st, 2012. During December 2013, $5,866 of office supplies were purchased. Physical count of supplies as of December 31st, 2013 shows $637 of office supplies available. This one is good. I like this problem. So let's break this down. So we know the end of 2012, there was a debit balance for office supplies. So there were office supplies there, right? So that's an asset account. So it ended 420. So that means we started 2013 with $420 worth of office supplies. During the year, we've got purchases. So there's an increase there, $5,866 of office supplies. We did an audit, we checked everything, we did a physical count. We see that something is off, right? So we see that's not correct. We've got $637 of office supplies. Let's look at how we figure this out, because this is really interesting. So first thing we're going to do, we're going to take what we started with. So let's see. So we've got $420, right? And then during the year, we purchased the 5,866. So we got that. But remember, the physical count shows $637 worth of office supplies available. So this is the fun part. So we take that 6,286, we subtract the $637. That's our number. So we get the $5,649 of office supplies. And this is on December 31st. So here's the two accounts. We've got our office, and I'm going to abbreviate this, sup expense, and then we're going to have our office supplies account. All right, so let's look at this. So we've got the debit here for office supplies expense. We got 5,649, and we're going to take this over to office supplies, 5,649. So we've got that, and this is how it looks for the adjusting entries. I hope this helps to add some clarity to it, helps with working on the adjusting entries. Make sure to keep working out the practice problems. Those will definitely help. Reach out to me if you have any more questions. But otherwise, keep up the great work. Proud of everyone for the great efforts. Thank you.